Hello guys, welcome to the next level trading of YouTube channel. So I want us to quickly look at something that happened yesterday during price delivery in GU and also in EU. My expectation and the setup I built for these two pairs, but unfortunately I took a loss in GU and I then neglected to actually execute the setup in EU because I decided to take the GU based on a perspective I saw in the charts. So this is GU. This is a daily time frame. You know, the weekly Forex forecast is already available in the YouTube channel, and the link to that is also in the description section to this video. This is just a quick review which I just want to conduct and then make it available in the YouTube channel for you all to go through it and also learn one or two things from it. So this is the daily time frame, and what we can see, we made reference to this bullish order block in the daily time frame, how we saw this reaction and price pushing to the upside, breaking through this rejection block, and what we can see is volume closing above. Then we identify this zone, and we can see this is an institutional order flow before the bearish continuation that took out these low points. We can clearly see that this Friday daily candle took out this buy side liquidity, mitigating the mean threshold of this candle week, which is in confluence to the institutional order flow low points. So basically, you know, in the weekly Forex forecast, I called our attention to this bullish fair value gap and this rejection blocks, and that was violated to the upside. How we should look forward to price pulling back into that zone, and we have the bullish continuation. When I saw the mitigation of this institutional order flow and the mean threshold of this candle with price taking out all this buy side liquidity. So from the 4-hour time frame, what I saw was the single candle order block, because here we can see price mitigating that sponsorship zone, and we can see price took out this buy side liquidity. We have this rejection candle, and we can see volume closed below that. You know, basically I told them in the mentorship program, I taught them in depth about the single candle order block and what to expect in lower time frame. I'm not going to go into details about that in this particular trade review. So we have the single candle order block. Those that are in the mentorship would understand what I mean, and what we can see, we have the engulfing. So basically I was expecting to see bearish movement of price to the downside into the zone, which is the daily bullish fair value gap, and we can see we have this unmitigated week. And clearly what I saw from the 4-hour time frame is this inversion fair value gap, because we can see we had the movement of price to the upside that took out all this buy side liquidity, mitigating the institutional order flow that we had and saw in the daily time frame. And we can see price mitigating the mean threshold, approximately the mean threshold of this bearish order block. So clearly now I expected to see bearish movement of price to the downside. We have this sell side liquidity, we have this minor sell side liquidity. This is something I shared in the Telegram community. You can join the free Telegram community if you're interested in joining the free Telegram community and benefiting from the free setup I shared. And then the stop loss was not really above the week, but just above the mean threshold of this candle week. So basically now this was the entry I placed, which was at the mean threshold of the inversion fair value gap. Then from the 1-hour time frame, what I saw was this bearish order block, and I made an annotation that price shouldn't close above this. If price goes above this bearish order block, then the bearish movement has been violated to continue to the downside. Then to the 15-minute time frame, what I saw during the session was anticipated the movement of price, though from the 4-hour time frame I immediately just set a pending order. So what we can now see from the 15-minute time frame was I identified this as a market structure shift, since basically what I was seeing was the single candle order block, which you would clearly see that in the 5-minute time frame. So we can see that in the 5-minute time frame. Basically this is it. We have the market structure shift here, because clearly you can see that price failed to continue bullish to take out this high point, price respecting this bearish order block, and we had the follow price to the downside. So this is where we have that inversion fair value gap. So from the 4-hour time frame, I just decided to just set a pending order. I was willing to reach that certain amounts in the trading account, so I set a pending order. So now when we go on to activate the session indicator, which I'm going to do right now, what we're going to see is, now let's play price to see back to the 15-minute time frame, because I said price shouldn't violate this bearish order block we saw from the 1 hour time frame, which we can see this order flow, and we have fair value gap. So let's play price to see what happened. So this is price delivery. So when I saw the Asia session, you can see the Asia session clearly went back into that and activated the trade setup back to 4 hour time frame, so that you can clearly see that. You can see, so the Asia session went back into the inversion fair value gap, picked up this trade entry. So we can see price activated that. So I started to just see bearish movements, but when we go back to the 15-minute time frame, plain price, you would see what clearly happened. So let's play price to see what happened. So we can see we are still in the Asia session. So when price delivered now during the Asia session and we are preparing for the London session, I looked at the possibility of price returning to the upside to take out the buy side liquidity, the Asia session high, and then we just have a bearish continuation to the downside. But price was just given a choppy price delivery. We can see London session, we just had a very choppy price delivery. Price went, took out the high, but then price failed to give impulse to the downside. So let's play price to see. And we know GU and EU are positively correlated. So let's play price to see what happened. Now what we can see is now the New York session also failing to drop. So we can see we had a very rough, choppy price delivery. So we know that, yeah, from this perspective of price movements here, we can see a bullish perspective to the upside, this return to the upside. But basically, you know that ideally the structure is bearish, but we have an internal structure of a bullish market condition. So I was expecting that since price took out buy side liquidity, mitigating this zone, an institutional order flow, we should have the possibility of bearish movement to the downside before we can continue bullish. But back to the 15-minute time frame, let's play price to see further, and we can clearly see that both the New York, the London, the Asia session all gave us a very rough price delivery. We can see the Asia session, the London, the New York. So basically, I took a loss on this trade, and we'll go back to check, and then we're going to check the Euro USD so that you can see what happened. So you can see how price just went against us. So I took a loss in this particular position. Price took out the buy side liquidity and then started giving the bearish movements to the downside. Now this is Tuesday, this is the new day. Now this is the Asia session we are in, so we're seeing the possibility of more bearish continuation to the downside. If this is going to go bearish to the downside back into the 4 hour zone here, back into this 4 hour zone, and then we continue bullish, the possibility of framing bullish continuation. Now we can see price took out the buy side liquidity. We still have a single candle order block here, took out buy side liquidity, volume close. So we could see the possibility of now price giving us bearish movement to the downside. So this was what happened in GU. So I took a loss in GU. So let's check the Euro USD and see how that clearly played out. So I base my position on Monday on the GU and neglected the EU, because I calculated my risk. So I just decided to just fix all that risk into GU, and unfortunately GU failed. So I don't really trade on Monday, but I just saw that and I was like, let me just trade that on Monday. And unfortunately I neglected the good setup for the bad setup. The GU wasn't really the bad setup because GU gave a candle model for me, why EU had no candle model. That was the reason why I even subscribed to take the GU. So let's check the EU so that you get what I'm trying to say. So this is EU, Euro USD, and you know the trading forecast is already in the YouTube channel. So the link to that is in the description section to this video. So what we can see is, you know, I told us we should expect to see the bearish movement to the downside into this bullish fair value gap, because now what we can see, price reacting at this bearish order block or rejection block, whatever you want to call it. And we had this bearish movement to the downside, failing to take out this low, and we had the bullish momentum to the upside. Here we have this rejection block, and we saw price reacting back into the zone, and we have this unmitigated candle wick. So I told us to expect the possibility of a bearish movement to the downside into the bullish fair value gap, and then we have the bullish continuation. So to the 4 hour time frame, let's get to the 4 hour time frame. what we can see now, I called out this model in the forecast that we have this quasi model. So price would react and give us bearish movements. That was what I called our attention to. And we can see price did not really mitigate this bearish order block, which you can see we have the tweezer candle pattern here. So clearly now we saw this price delivery. So based on the candle pattern, I don't really have a consideration to want to take a sell here. But because I saw this price reaction, price did not mitigate this quasi-model model. We have the fall of price. Price gave us the impulse that took out liquidity. Price fell to the downside. So it's not really a solid perspective. That was why I said it. It wasn't really a solid perspective. That was why I didn't take the entry in Euro USD. But due to what I saw in GU was now why I decided to say we should expect that sell move also from EU. But what happened was GU played out roughly and EU now played out so nicely. So it was later on in the lower time frame that structure gave the perspective for the bearish movement. But now what we can see, we have this bullish candle and the bearish candle. So not really solid perspective. So to the 1 hour time frame, what we can see now in the 1 hour time frame was this. This was what I worked with. I looked at this as price giving us the fall and now giving us this bullish that failed to continue to the upside, and now price fell to the downside, taking out the low of the bullish. So it is in the lower time frame that you can see a better perspective to that. So let's go to the 15-minute time frame. So in the 15-minute time frame, what we can see now is price fell. We had the bullish failing to take this. Price fell, created this again, failing to take this. Price fell to the downside. So what we can see is we don't really have yet the market structure shift, because we can see price just took out the sell side liquidity. Volume did not close below that. So that was why, again, I really did not consider setting a pending order on EU. I decided to go with GU. But now what we can see, we have the fall. So basically now, let's play price to see what happened. Now we can see now price gave us the market structure shift. So if you're to take a position here, what do we have here? We have this bearish order block. So this should be the probable zone to consider taking an entry, because here is where we have the buy move before the bearish movement to the downside. We get it, right? So we can clearly see that. So if you're to take a sell position, this is your price sponsorship zone to consider. So we can possibly now go on to set the short position here, and the stop loss can just be above this high points. And basically now this is the sell side liquidity. That was the target. That was just the target to see price takes out this sell side liquidity. So let's play price to see how that played out. But I didn't take the EU trade because I decided to take my risks with GU, and I wasn't really on chart to now see when this occurred. So let's play price to see. So we can see price giving us this movement. Now we can see how price returned to this, took out the high anyways. So let's play price to see what happened. Now we can see now we have the fall to the downside. So based on this delivery now, we can see price return mitigated, fell to the downside, a pullback, price fell, impulse to the downside. We can see fair value gap. So you can also take another short position here. Again, we can also take another short position at the main threshold of the fair value gap. Stop loss can just be above the high. And then we have the same target price again to the downside. We get it, guys. So this is how, when I check the chart based on my analysis, I try to also have a back testing session to clearly understand what took place. By this, you build mastery. So let's play price to see what happened. Okay, let's see. Okay, so price didn't really return to the main threshold to activate this trade. Let's clearly bring this to the side and see. So we can see price, we missed that setup. So we can see there is a miss. So price didn't really return to activate us. So let's see, but we can see clearly now that the bearish movement occurred. So we can see that there was just a disalignment of correlation between GU and EU. Now what we can now see now, price gave us what? A break of structure here. We have a break of structure here. So we can see price giving us the bearish momentum. broke structure. So let's play price to see how price delivered to the downside further. So if you were to take another entry, basically you can see we have this institutional order flow before the sell move that broke structure. Now price created this buy side liquidity, so we could see price mitigate these because we have unmitigated weak and then bearish continuation to the downside. So let's play price to see what happened. So clearly, yeah, price respected that. Price again returned back. Now we can see we have another break of structure here. So let's play price to see. Price given this consolidated state delivery. So let's see what happened. So okay, price gave another move to the downside. So clearly now you can see how price went back to the targets. So there was just a disalignment of correlation between GU and EU yesterday, which was Monday. So this is just all I wanted to show us, guys, how I decided to take the wrong setup, or I made a mistake of taking the GU based on what I saw the candle model, and that happened to fail, and now EU played out so nicely and I missed to take this particular position. So this is just it, guys. So if there is any clear setup, I'm going to share that in the free Telegram community. So basically now we're looking to see how price is going to dip lower into our bullish fair value gap, and then we could look to the possibility of framing our bullish continuation to the upside, since we are expecting and anticipating the probable bullish continuation for this particular week. So this is all, guys. Cheers and God bless you all.